David, this is your call that we are seeing a preview of what is ahead in 2022. Why?
Well, look, because you've had well, first, thanks for having me on the call, Sarah. But just as you said, we're seeing a tremendous defensive rotation beneath the surface in the S&P 500. So, yeah, everybody talks about how great December has been, and it's been great. But when you add up the utilities, the REITs, the staples, and healthcare, these are all areas that you want to own heading into an economic slowdown. Collectively, those areas of the market are up more than 9% for the month. So, look, we can wax on about what the headline indices are doing, but if you want to get a real sense of what the market's telling you, you have to dig beneath the surface. And this defensive rotation is very much in play. You know, nobody talks about the fact that the small caps are really the pulse of the domestic economy. The small cap stocks are down 8% from the highs. They haven't been making new highs, and they haven't budged really since last February. So when you combine the small cap underperformance, the defensive rotation, and the flat shape to the yield curve, it's all telling us that what we're going to be seeing next year is GDP growth downgrades as opposed to upgrades.
So you're sticking to your bearish guns, David, but I have to say, I read your note almost every morning. You've been negative pretty much all year, and the economy has been remarkably resilient in the face of multi-decade high inflation, variants for COVID, and very unpredictable path of this pandemic. What do you think you got wrong as far as the timing?
Well, look, it's like I said, beauty is in the eye of the beholder. And I said before, you can look at the S&P 500, which should just be called the S&P 5, because this is the most concentrated market that we've had in our hands since 1999, and before that, 1969. And going into 1970 and 2000, we'd be having the same conversation. I remember those being very good years. And to quote Bob Farrell's rule number 7, markets are strongest when they're broad and they're weakest when they narrow to a handful of blue chip names. So the point I'm making is that, the headline index, a phenomenal year. You know, where I got it wrong was basically, you know, look at the past 3 years. This is actually incredible. I mean, the S&P 500 has risen at a 20% average annual rate. I mean, Sarah, that's happened like 6 times in the past 90 years. But 80% of that heavy lifting has been from multiple expansion, and only 20% has actually come from actual earnings. Usually they both are 50-50, 80-20 in favor of the multiple. And, of course, what's happened, and maybe what I underestimated, was the power, once again, of the Fed, because all these past 3 years had one thing in common, which was that the Fed was easing monetary policy, and rather significantly, and that started back in early 2019 and hasn't really stopped until, well, basically now. So I think next year is going to be a year of transition. And when I say transition, I mean transition away from all these massive policy tailwinds to policy headwinds.